Welcome to World of International
In
Finance.
this
Today
transaction,
we
we
are going
sold
to talk
50
about the
euros.
behavior
It
of the
opened at
countries and the influence that are present in their
1.06126
respective currencies.
and
Okay,
closed
then
at
we will give you 10 tips to
1.06123,
operate better
where
in
land
the
1
forex
was
market.
zero point 0.3.
Starting to trade
The
in the forex
duration of
market can be
transaction
really
was 16
difficult.
minutes,
For this
and we
reason,
was
this
based on
time
the
we will
next news,
present
and
a
we are
series
going
of
to explain
forex
the principal
trading tips
aspect
that will
of
help
this.
you take off your career as an operator and improve your earnings.
The 10 tips for Forex traders you are about to see will help you avoid the most common trading mistakes, such as trading in excess, ignoring the strategy among the others. Even if you are an experienced investor, these tips will help you in improve your profits. First, select only a properly regulated broker. Second, create a trading strategy. Third, at first invest little money. Fourth, don't rush to make decisions. 5. Ignore your emotions.
6. No one knows the future. 7. Choose a good broker. 8. Plan your trading activity. 9. Do not overdo forex trading. And 10. Analyze from your trading history.
Below, we will talk about the currency market such as euro dollar, dollar yen, sterling dollar, and sterling yen, performed in the weekend of March 13 to March 17 of this year. The first transaction was made on March 13 with the euro-dollar currency, where a short process was carried out with the objective of selling expensive to buy cheap. This process was performed by the strength of the dollar presented for this day and the great influence that is reflected in the euro. For this day, the dollar was at 2,987.93 and the euro at 3,177.33. Below are evidence that the news that justified the transaction.
In this transaction, we sold 50 euros. It opened at 1.06126 and closed at 1.06123, where land 1 was zero point 0.3. The duration of transaction was 16 minutes, and we was based on the next news, and we are going to explain the principal aspect of this.
The first news is transaction euro-dollar is dollar rise ahead of political rise in Europe. The dollar climbed on Tuesday ahead of expected interest rate rise by the United States Federal Reserve as political rise from Dutch and French election to Britain exit from the Euro Union weighed on European currencies. The dollar index, which measures the greenback against a basket of six major peers for 14 European, climbed by a third of percent to 101.67. So you have got a strong dollar with high on European currencies because the political outlook for euro is so uncertain right now, and Fed message has not held those currencies with speculation that the March high could be a household high say be and out currency strategy Sam Gallo in London.
Next news is that the dollar advances as Fed widely expected to raise rates. The sentiments remain firmly bullish towards the greenback with further gains expected as speculators bet on the Federal Reserve raising in the United States interest rates repeatedly this year, said and Britain-based research analyst Lukeman Ortega at online currencies broker FXTM. The Fed starts a two-day monetary policy meeting on Tuesday. Fed funds futures have priced in a 95% chance the Fed will nudge rates higher on Wednesday. The dollar index, which measures the greenback gains as a basket of six major currencies, climbed the 0.2% to 101.54 on DXY.
The final news is oil has led as a crude stone mount dollar strength, falling oil price went on energy shares on Tuesday in the wake of a report of rising crude stocks. Will the USA dollar strength ahead of an expected Federal Reserve Reserve decision to raise interest rates. Oil slide after OPEC report a rise in global crude stocks and surprise. Output jumped from its biggest member Saudi Arabia. Even though OPEC made an outward revision to its global demand outlook, signs of even modestly higher Saudi output flooded investors. Investors also are assessing the potential outcome and impact of joining of G20 financials. USA President Donald Trump's first baggage and tenth election in the Netherlands, the dollar rose 0.4% against a basket of currency. The XG bolstered by the widely expected USA rate increases and by political rise euro as that election gets underway. The euro fell 0.% and caution ahead of the Dutch bond.
Okay, the second transaction was made on March 14 with the dollar-yen currency, where a short process was carried out with the objective of selling expensive to buy cheap. Janet Yen bullish comments caused a rapid and strong rise in the yen and was mostly felt in this pair as it rose above the with is what was once a strong resistance. The price has been maintained and this seems to be a significantly bullish development. In this transaction we sold $14. We opened at 113.543 and closed it at 130.539. Where line 1 was 0.4, the duration of this transaction was 1 minute, and we was based on the next news, and we are going to explain the principal aspect of this.
The first news is Donald Trump after Fed says rate high percent radar. Okay, the dollar posted a sell loss against major currencies on Wednesday after the Federal Reserve raised interest rate as expected, but signaling a more gradual pace of monetary tightening this year than many in the market anticipate. The greenback fell to a 5-week low against the euro, a 4-week out versus the Swiss franc, and 2-week low against the yen and sterling. Okay, the Fed on Wednesday lowered the target overnight interest rate by 25 basis points to a range of 0.75% to 1.00%. But further rate increases will only be gradual, the Fed said in its policy statement, with officials extending to their outlook for 2 more rate hikes this year and 3 more in 2018. The Fed literally raised on in 2018.
Okay, the other news is that the global stock surge. Dollar pace as Fed sees a gradual tightening. Okay, the United States stocks surged on Wednesday while Treasury yields fell and the dollar weakened after the Federal Reserve raised interest rates for the second time in 3 months but did not flag any plan to accelerate the pace of monetary tightening. The dollar is plunged, helped pull gains in assets dominated in the United States currency, including the oil and the gold. Investors had greedily expected the central bank's rate increase, which was supported by steady economic growth, strong job gains, and confidence that inflation is rising to the Fed's target. Okay, the dollar fell 1.2% against as a basket of key currencies and hit a 5-week low against the euro. Oil prices rose after 6 sessions of declines, with the greenback-denominated commodity extending gains as the dollar weakened. Before the decision of crude had been lifted by a surprise drawdown in United States crude inventories and data from the International Energy Agency suggesting OPEC cuts should create a crude deficit in the first half of this
The
year.
last news is global markets Asian stock market waiting for clear view on US rise. Asian stocks consolidated recent gains on Wednesday before US central bank policies meaning that could signal how much monetary tightening to expect during the remainder of the year. While an immediate rate has fully priced in by market throughout recent data, particularly of China, has followed a rally in Asian equities since the start of the year. Investors are expecting more headwinds for emerging markets due to an increasing has-quit Fed. Asian markets have had a good start to the week thanks to positive news of the region to economy powerhouse China and India.
Okay, according to the representative news that influence the exchange market, especially in the sterling dollar, we developed a long position on March 16 of this year according to the news. The sterling dollar pair shows sideways trading since morning settled at 1.2260 and the price remains confined between the next trend case that represented by 1.180. As we mentioned this morning, the price needs to breach one of these levels to detect its next trend clearly.
In this transaction, we bought $50. We opened at 1.23494 and closed it at 1.23500, where long one was 0.6. The duration of transaction was 9 minutes. We was based on the next news and we are going to explain the principal aspect of this.
First news is that the dollar on the ropes as Fed deals blow the outlook. Okay, the dollar dropped to a 5-week low against a basket of currencies on Thursday, still reeling from the previous session when a statement from the United States Federal Reserve statement failed to signal a much faster pace of monetary policy tightened. The Fed on Wednesday lifted the target overnight interest rate by the 25 basis points to a range of 0.75% to 1.00%, but stuck to its original forecast of 3 rate increases this year. Investors were expecting for rate hikes in this year.
Ron Wallace, management director of over-the-counter FS and interest rates and INTL-FC Stone, said if ever there was a time when the dollar would consolidate and move lower, Wednesday provided the perfect opportunity as the market built in expectation of a more aggressive rate hike pace. Sterling meanwhile rose and some surprises about two chains of a rise in the United Kingdom interest rates. The pound high a two-week high of 1.2373 after the Bank of England kept interest rates on hold but graph a handful of hints is voting results and it is meaning that it might rise the sum. The pound was locked up is 0.6%. Okay, the second news is Bank of England's four bows or four rate hike, others might follow some. The aspect important are noticed is a Bank of England policy market surprise, investor by breaking runs and voting to raise interest rates, and some others said it will not make much for them to follow suit. And the BOE said on Thursday, signaling a potentially bigger speed zone, but Sterling Jones a full cent against the USA dollar to hit its highest level since March 1st on the next that more MPC members might vote the Faraday high zone. The yield on 10-year British government bonds hit their highest level in a month.
Okay, Adding to a hawkish shift in some of the bank's tone, the BOE edged up its forecast for economic growth in the first quarter to 0.6%. Britain's economy surprised, withstood to initial shock of the Brexit vote, and the last month the BOE said it expected the economy to grow by a relatively strong 2.0% this year, but was likely to slow after that due to the uncertainty about the country's future ties with the European Union, which buys about half of Britain's
The last
exports.
news is dollar slide were stock gain on Fed mob dashboard. A key index of the world struggling to recurring high as well. The USA dollar sank to amount loan on Thursday and its mentor digested the recent USA. Interest rate increasing and indicators there will be no bit eye in the pace of monetary tightening. And there sterling yen after outgoing ban of England policy marker, Christian Ford and specularly vote for a rise in interest rate at the bank's March meeting.
Okay, and the United States Treasury yields rose from more than 1 week lows on the view that they had fallen too sharply in the prior session after the Fed maintained its outlook for only a gradual pace of interest rate increases this year. And the oil prices used as a support from a weaker dollar was offset by a stubbornly high level of the United States inventories.
The last transaction is according to the representative news that influenced the chain market, especially in the sterling and yen. With the low and long position March 17th of the year, according to the news, with the objective of buying and sell expensive the British pound versus the Japanese yen. It's a highly volatile pair. Yen is often used as financing currency because it historically is a currency with low interest rates. Since the United Kingdom is one of the large economies in Europe, the sterling yen pair can be considered as a filter for the health of the world economy.
Okay, on the other hand, this pair acts as a representation of non-risk market movements when the carry trade is reserved. Additionally, the forex technical analysis, such as support and resistance trading, tends to work well due to the amount of volume and forex transactions that takes place in the sterling yen. This volume and liquidity carries technical patterns that shorter-term traders closely follow. In this transaction, we bought $30. We opened at a 139.700 and closed it in a 139.706, where line 1 was 0.6. The duration of transaction was 5 minutes and we was based on the next news, and we are going to explain the principal aspects of this.
The first news is the last transaction is sterling has to with high on BOE lifeline. The pound hit a two-week high against the dollar and principal currencies on Friday, driving confidence from side that some of the Bank of England may be learning to war of right interest rates to support the currency. After minutes from the bank's latest monetary policy committee showed markets on Thursday by showing one outgoing official voting for a rise in rates, and other on the verge of doing so. Inflation get much higher. Okay, and the short sterling futures for the next March have shifted by 6 basis points since the bank statement on Wednesday, and now the price in a single rise in interest rates over the next 20 months that should offer the pound some support as it heads into a period of renewed political pressure when the Brexit talks start next month. Second news is update 1. Japan USA agreed to abide by G7 G20 FX agreement ASO. Japan's finance minister Aso said he agreed with his USA counterpart Stan Munchen of the need to abide by the G7 and G20 agreements on currency policy, including a warning that excess currency volatility is undesirable. US President Donald Trump has accused Japan of exploiting and with yen to give export an unfair trading advantage, leaving Japanese policymakers worried that Washington may open a G20 agreement that gives Tokyo room to intervene in the currency market to send any unwelcome yen spike.
Okay, the G20 economists have long agreed on 3 points on currency policy to refrain from competitive devaluations, about targeting exchange rates for competitive purposes, and that excess volatility and disorderly movements in the currency rates were understandable. Okay, and the last news is that the G20 finance heads to agree on forex, struggle on trade, climate change. Okay, the G20 do agree, however, to show continuity in their foreign exchange policies. Said, we will consult closely on exchange market. We reaffirm our previous exchange rate commitments, including that we will refrain from competitive devaluations and we will not target exchange rates for competitive purposes, said Dame.
Okay, USA President Donald Trump has accused Japan of exploiting a weak yen to give export an unfair trade advantage, leave Japanese policymakers worried that Washington may open a J20 agreement that gives Tokyo room to intervene in the currency market to sustain an unwelcome yen spike.
Thanks for your attention. Goodbye.